Fed Day, Warriors. I'm Dale Pinkert. Welcome to FACE. So, off the gun into the Fed, I have no ideas. I do not know what to do and try and get it over with. Oh, I could go to a 5 or 15-minute chart and try and scalp something out before the Fed. Not my style anymore. So I'm looking to react to the reaction. But you know, what's great about being part of a team in a sport, in a company, is that if someone is not on top of his game, there's always a teammate to pick you up. And that's the concept that Blake and Steve and Stelios came up with for ForexAnalytix, a team trading, team analysis project that I think is, where could you find all this talent on one site? So for those of you that aren't members, Andre picked up the silver yesterday on a Gartley. It's looking pretty good. A lot of green here. Greg are looking for one more low in the yen. Blake and Steve shorted Canada up near the high. Greg is still looking for a shot up in Euro USD. We'll see what happens with the Fed. Blake got long on pounds. So a lot of green in the patterns in play. Okay, so you all see them now. The key is to have these and be a subscriber so you get them when they're pushed out on your workstation. Like right now, you guys could see ForexAnalytix stream, and these alerts are pushed out on your laptop, your PC, if you're on the go on your phone, so you could get your orders in at entry areas to take advantage of the trade. So the team's always going to alert you. I've rarely seen nothing going on here between Greg and Blake and Andre and Stelios and, you know, the whole team. So there's always action. And if you're alone and you're like me and you don't spend 5 hours in front of the screen doing analysis like I used to, you're not going to see a lot of things on your own. So the other advantage happens in the chat room, where you have 100 traders in there trading, not just you know, showing charts. They're actually putting stuff on, and after a while you'll figure it out who really gets it in there. And if you don't take the trades, and I always recommend no one takes anyone's trades blindly. Always do your own work. See if it lines up with what you're saying and what you're seeing. Know how to manage your risk. But there are people that are in that room, I'd say at least 20, maybe more. Blake will straighten me out, that this is how they take care of themselves, their family, their obligations through trading. So going into the Fed, I wish everyone luck. Use less leverage, lighten up. It's okay to be flat, and it's okay if you miss the initial move from the Fed. Like I said before, it's pretty binary. It's you know, red or green. The best you could do is have certain areas that you would look to initiate new positions on after the event. That's trading. The other is roulette. So with that being said, I'm wondering if Blake is aggressive or pulling in his horns a little bit before the Fed. What are you doing, what are you doing, partner? In front of
I just sold some dollars on that China story.
Okay.
You know, that's some pretty big news that China's said to planning countermeasures. Yeah.
Yeah. What are they, Blake? What are they going to do?
I don't know. But I don't know
they
what.
Go build another island in the South China Sea.
They're gonna you know, charge us tariffs on the, you know, 14 Lincoln Continentals that comes over to them every year. I don't know. But the bottom line is, you know, we are in the midst of starting a trade war, so with China, which is definitely not going to be good for risk, and it's one of those things that's going to weigh heavily on the dollar, and I think people are going to be a little hesitant to get too aggressive ahead of the FOMC, but you know, as long as you know, well, everybody's expecting Jerome Powell to be hawkish today. Every you know, bank analysis that I've read this morning is expecting a, you know, hawkish hike. So at this point, it's maybe the risk is not, you know, if it isn't a hawkish hike, what happens to the dollar? And so let's talk about a couple of things that that happened yesterday, and then what we're looking for today. Now, if you look at the dollar index yesterday, I think I drew this out, and you're going to have to correct me, Dale, if I'm mistaken here, but I drew this out, right? We were here yesterday, and I said, hey, we might hit new highs and reverse.
Yeah.
Or we might go down here and reverse, but we'll probably be at 90 ahead of the FOMC.
Yeah, nice. Yeah.
So we are, hold on, let me shut off this. I have to turn, I have my squawk. It's going.
A lot of dollar bears, Blake, have like 84 for a target, and those are the conservative dollar bears.
Yeah, we can look at like the longer term on what it looks like, but what I was trying to point out here is that I was expecting the dollar, you know, to hit this, you know, range high, maybe a little higher, and reverse and be at 90 by the FOMC. Well, guess what we're going to probably be at?
Yeah. At
FOMC, mid-range, right at 90. That I totally expected that. I went long the euro, and last night I took it off the table prematurely, and I actually lost a little bit of money being long the euro, but I was aggressively short the dollar Canadian. So when the dollar Canadian broke lower last night, I closed it out at 130.25. And making as much money as I did in the dollar CAD, I was like, okay, well, I'll just pull the euro off and just sleep well tonight. And you know, I did really well, but unfortunately, you know, I didn't capture, you know, all of this, even though I have a pattern in play. But as I explained to you guys, a pattern in play to me is more directional. Very rarely am I going to sit short dollar Canadian. I've been in and out of this thing 3 times, maybe.
Yeah, by the time it gets to your target, you've traded it 10 times.
I may have. I may have traded it, you know, 3 times, 2 times, 10 times. Who knows? But I did take the dollar CAD off just because, you know, like I said, it to me it was it's you know, just booking profits along the way.
You
especially
never go broke. You know, Bernard Baruch had a few good clients like the Kennedys and the Rockefellers, and his famous statement, like, is you never go broke taking profits.
Yep.
Pretty true, isn't it?
It is. It's very true.
So.
Yeah, very, very, very true. And so I just actually closed out a euro long and a pound long that I picked up right after the news that came out, the headline that came out about China. But anyway, what was I going to say here? Okay, so I'm out of my Canadian. You can see we're testing really key support here. I don't think I'd be short the dollar Canadian going into FOMC where we're currently at, but what I would do is I'd sell a rally. So and this is kind of I think the theme for today is you want to sell dollar rallies today. Now, the problem that I'm sensing at the moment is that everybody's expecting to sell dollar rallies today. I'm kind of worried that maybe Jerome Powell comes out a little bit more dovish than we think, and then the dollar doesn't give us opportunities to sell it. higher. So you know, we have the euro dollar, which, you know, has already it dipped in late North American trade, and we're already up here now. You know, my 2 cents is I want to buy any dip now towards the lows. Pound, same thing. Is like I'd like to buy a dip down towards 140. You know, now the Aussie dollar and the Kiwi dollar, let's talk about those for a minute. They are bearish. Why are they bearish? Dale, can you answer that question? Why is the Aussie and the Kiwi bearish?
Risk off.
Oh, okay. Risk off. Why else?
Commodity prices under pressure, and just the trend is down.
Well, yeah, actually,
It's
China. That was the word. That was the answer I was looking for.
I have confluence of reasons.
well, we do have, you know, crude's breaking higher, and we've got, you know, precious metals that look like they're bouncing off of support. But it's really mostly China. If we're going to war, trade war, with China, it's going to have a very big effect on the you know, Pacific currencies like the Aussie and the Kiwi, the Anapodian currencies like the Aussie and the Kiwi, and they are grossly underperforming. The biggest beneficiaries right now, you see the Euro Aussie.
Yeah.
Here's the Euro New Zealand breaking higher, finally broke that 618. Pound Aussie ripping, pound New Zealand flying. Okay, which Stelios had that just pegged. He got out a little bit early of his pattern in play, but he had that one pegged really well. And so you have the, you know, Aussie and the Kiwi, they are grossly underperforming. If we do have risk off, the Aussie yen and the New Zealand yen look extremely dangerous.
Yeah.
They look extremely dangerous. Now,
Blake, I heard that you know, that Saudi Aramco IPO that there's been market talk about for almost a year now. China may take them out of the deal and just buy the deal, and that would position them fairly well in a trade war, don't you think?
I'm not even following what you're saying.
Oh, well, that IPO that the Saudis were going to do, instead of doing an IPO, China's just going to buy the deal.
Oh, I'm not even paying any attention to that.
Okay.
Wasn't even
on your radar.
My radar. Nope.
Okay.
Nope. But the reason why I'm pointing out the Aussie and the Kiwi is, even though I want to buy the euro, buy the pound, I mean, I want to sell the dollar, I don't want to do it against the Aussie or the Kiwi. These are two currencies that I will stay away from. So the trick to, you know, being short dollars is being short dollars in the right spot, not necessarily just shorting dollars across the board. That's one thing that I think we all have to pay. You know, you have to be cognizant of that. Not every dollar is going to be treated equal. Not in this case, not based on the macro environment that we're dealing with right now. You know, if I want to sell dollars, I'm not going to do it against the Aussie and the Kiwi. Not at this point in time. They look extremely weak. Now, the Canadian is a different story. Now, you see the dollar is slumping against the Canadian. Why is the dollar slumping against the Canadian? Because we're expected to, you know, come up with a NAFTA agreement and excluding autos, actually even on Friday, and that's the news that knocked the dollar Canadian lower. It knocked the U.S. dollar Mexican peso lower. So we're going to see a different environment, because if we get risk off, most of us are accustomed to just selling commodity currencies, emerging market currencies, but I don't think you want to do that in this case. If we get risk off, I don't think you want to sell Canadian or sell Canadian dollars or sell Mexican pesos based on what's happening in NAFTA. And that's the whole reason. Let's go back to last week at this time, Dale. last week at this time, I shorted the Aussie Canadian, and I said, hey, this isn't my trade. This is FX macros trade, but I'm taking it because I know exactly why I'm taking it. And I shorted the Aussie Canadian at 102.10 or so. And I have obviously got out of it a little too early while I was at Disneyland when it dropped to 101 and change. But as you can see, the Aussie Canadian's getting creamed. Why? Because the Canadian currency is strengthening because of NAFTA. The Aussie is weakening because of what's happening in China. So the Aussie Canadian is a clear loser in this particular environment. Same with the New Zealand Canadian. New Zealand Canadian is equally a big loser. All right. So that's the reasons why you don't want to treat the Aussie and the Kiwi the same as the Canadian and the peso. And by the way, this US dollar Mexican peso looks like it's going to go, in my opinion, a lot lower. It looks like we're going to drop pretty aggressively here. Now, let's talk about the yen, and then I'm going to go over to the dollar index, then I want to talk about S&Ps. All right, so I did sell some dollar yen, and I'm short, like right around here, not too far away from where we're currently at, and I'm willing to add to it. All right, on any rally today up to 107, I am looking to add to the dollar yen. The dollar yen is in bearish territory, plain and simple, because we've broken this, big triangle, and because of, stocks showing a little bit of weakness here. I think the dollar yen is, and plus with all this this news out of China, I think the dollar yen is set up for a much bigger fall. As long as we stay below below 107, I want to be on the short side of the US dollar Japanese yen. Now it gets really bearish if we drop below 105.70. That's when things get extremely bearish for the dollar yen. But let's talk about the dollar index, because Dale, you said some people target 84. Well, I don't think that's very far off. I mean, if you look at the teal, okay, and I want you to focus on the teal flag pattern that we have here. The flag.
That's how they come up with it.
Yeah, I mean that, and we've had that teal flag drawn up here for months. Okay, so I don't think 84 or 84.50 or 85 is really too far off as far as downside targets. Now, this is in here. Let me grab this one really quick. That trend line right there is really the only one that matters to me.
Yeah, they intersect.
Well, yeah. We're not there yet, but but
that's what I was hoping for into the Fed, to sell dollars.
Yeah, I mean, but I don't know if we're going to get up there now.
I know. You're right. When everyone's waiting for a move to accommodate what they want to do, the market doesn't accommodate them.
No. And that is the bigger issue right now, is the dollar trend is lower, and it's not going to improve. Even everybody knows the Fed is hiking rates 3, maybe 4 times this year. Everybody knows the Fed Chair Powell is going to be hawkish and raise rates today. And this is the only response we have with the dollar right now. It's stabilizing. If the dollar can't rally on that type of news, then what's the dollar going to rally on? You know what I'm saying?
Yeah.
Okay, so with that being said, the dollar is probably going to get aggressively sold today. No, following the FOMC, we may spike up into these highs, but what I'm looking for is for us to spike up here and then sell off, or we might just sell off today, because if you know the Chairman Powell is just, you know, if he's not as hawkish as the market expects, we could go straight down, because everybody's looking to sell the dollar now. But, you know, how about if we all have to chase it lower? That's entirely possible. Okay, that is entirely possible. Now, let's talk about one last thing before Steve gets here. Let's talk about, here, I'm going to delete this stuff. Leave it kind of, I'll leave that channel there, because that's the channel that I'm, you know, the same one that I drew yesterday is the same one I'm paying attention to today. Let's talk about stocks. So we have the S&P, and the and I'm going to talk about all the indexes. So just bear with me, because this matters regarding like the dollar yen and stuff. So we have the S&P. Okay, the S&P is stalling right now on its 38% retracement. You can see it right here. You guys see that? 38% retracement. That's from the low to the high. We're at a 38% retracement, and that's what we're respecting. We came down there and spiked low last week, and now we're just kind of consolidating around here. Okay, so if we break through these lows, you know, we break through this 38% retracement, the S&P is going to come under, you know, in my opinion, a lot of pressure. Okay, and if you look at it, it looks like we are now, you know, you could say we're flagging, but regardless, we're not bouncing. Do you see how it just, I mean, we're not even bouncing.
Yeah,
it's just consolidating these losses. Now let's go to the Dow. The Dow is out of its triangle. That could be flagging, but regardless, it's extremely weak. All right, extremely weak. Let's go over to the, hold on really quick, stand by.
Blake's an FX astronaut.
Why is that, Dale?
He's got the right stuff, and he says stand by, and you know, I could see him. I could see him in his capsule. Like, you ever see the movie The Right Stuff about the early American astronauts?
I don't think I've seen that actually, no. But it sounds interesting.
Great movie.
Dale, have you seen the other one, Airplane, where it's Captain Over and the other guy is called Roger, and it's like Roger Over. What? That's really funny. What's our vector, Victor, and all that? Sorry.
Hey guys, I'm gonna have to turn over to you. I've got to take this the office is ringing me. So
okay, Blake.
All right. Thanks guys. Sorry about that. Good luck today.
Right stuff. You're like John Glenn.
Thanks guys.
Hey Steve, how are you, buddy?
I'm good, Dale. How have you been, mate?
Doing okay. So it's really refreshing to have a new mouthpiece from the Fed every, you know, so many years.
Yeah. Although they usually don't say very different things.
Yeah, but at least we won't see pictures of Yellen with people drawing beards on their face anymore. You've seen those tweets, right? So I don't know what they'll do with Powell, but you know, I thought it was pretty disrespectful, people drawing beards on Janet Yellen's face.
Guys,
you
for
saw
what
that,
worth,
huh?
No, I was just going to say I've seen that the mixture between Yellen and Bernanke, right? That's you cannot unsee that. Yeah. I was actually going to say, for what it's worth, my view on the FOMC is looking at what the market's pricing in. I've said this a couple of times, I think, in the last few days. We're pricing a near certainty of today's hike. I think that's a given. And then Fed
there's no chance of hacking.
Yes, they're now pricing exactly 50 for the rest of the year. I personally think that after Powell's
you mean 50 more, Stelio, right? 50
more,
yes.
Yes, it was three in total for this year. I personally think this is going to be the base case scenario after his Q&A or press conference, whatever it is. So I still think I might be in the, Blake said the opposite a little bit earlier. I still think the risk is for the dollar to strengthen a little bit after the FOMC. Maybe we'll go to price 3 and a bit, hikes 3.5, and then we start dropping. That's my humble opinion.
I tend to be of the same opinion, although I have to say that
markets, guys.
Yeah, although I have to say that the charts do show that we might have more dollar weakness, but simply speaking from a macro perspective, as you said, Stelio, I also think that the chances are that following Powell's first press conference, I can't see any scenario that the market will start pricing in less than 2 more rate hikes after that. As you said, this is the best case scenario. Worst case, we stick with the base case scenario, which might lead to further dollar weakness, because somebody can claim that based on that scenario of exactly 3 rate hikes for this year, we've had the dollar moving lower. And perhaps one of the reasons the dollar has stalled and is consolidating near the lows, as we can see through the dollar yen here or simply through the DXY here, is that because perhaps investors were unwilling to commit to further downside unless or until they heard what Powell has to say. So the worst case scenario that we keep on pricing exactly what we're pricing so far might actually lead to further weakness. But yes, there is a good chance that after hearing Powell speak, the market is going to start pricing a little bit more than 3 rate hikes, in which case we might get a bounce even towards 92.50, right? But having to do with the chart.
121 in the euro, Steve. I mean, that looks like a natural place still that could happen if we get that dollar rally.
Sorry, tell me again, Dale, which level would you like to see?
121, 121, this big flag pattern, if you connect the last 2 lows down there. That was a breakout area too. So, and one other thing I wanted to ask you,
it's absolutely possible.
I wanted to ask you this. Okay, the market knows rate hikes coming. That he's going to talk like a hawk. News breaking about China retaliation, and S&Ps are down 4. So they're really giving people a great entry to get short here. And I'm skeptical. I know the action technically looks lousy, but we're only down 4 in the face of that news. What does that make you think? Nothing?
Nothing really, because the market has surprised us plenty of times. I mean, one of the most obvious examples is not that recent anymore, but since it's an extreme example, was there a single market participant that if you ask them before the election night what's going to happen to the markets if Trump gets elected, would actually, right?
Right. No one expected a 30% rally in 3 months, 4 months.
Yeah, everybody was expecting the initial reaction we saw, but nobody would expect. Me included. What followed?
But Carl Icahn left the party and bought $1 billion worth of futures. Pretty good bad stock.
Pretty good bet stock. Very, very true. So I don't want to be trading on that, but I can tell you one thing for sure, and something that people should pay attention to. Having to do with stocks, by the way, nothing has changed. Meaning, two interpretations remain on the table here. One of them, a nasty consolidation that might resume for weeks. If you remember, I said that very, very early as a probable scenario. Second interpretation, another leg lower towards 2480 at the very minimum, or even 2400 here. So, 2 different interpretations remain of what this correction might evolve to be. I'm calling it a correction because, in a multi-year uptrend as this one, any kind of move you see lower, you should, until you have evidence of the opposite, definitely treat it as a correction and nothing more than that. Otherwise, you'll end up losing a lot more money than making, right? So I'm still viewing this as a correction. and the nature of this correction, we need more price action to determine. Now, obviously, being decently near this triangle, which is like the bullish of the two interpretations, the risks are still tilted for the next move to be to the downside, even if it is to come down and retest, for example, the 200 EMA, the triangle support. Of course, the triangle can prove to be like a little bit different of a triangle because we don't have, many points to connect yet. So it's a little bit arbitrary. The support line is a little bit arbitrary for now. But still, I think that the risks are tilted for a move to the downside from here. Now, having to do with treasuries, and this is one very important element here, having to do with the Chinese threatening about retaliation, is that don't forget that the Chinese have the power, in essence, to create an issue with US bonds. Now, of course, there is a whole conversation here which has to do with, on one hand, they have the power. They're holding like a lot of treasuries. They have the power to influence how this market is trading 100%. But on the other hand, it's like shooting their own foot. So, there's a lot of speculation about that. Regardless, we don't need them to know what we said several days ago, that the treasuries, at least, are not even waiting for Powell. I mean, they seem so weak. They've already started making a move both below this RSI trend line and the bear flag that we had here. So in all honesty, the treasuries look determined to resume their move lower unless we get something like, very different from Powell. So I think that, being long treasuries is a very, very dangerous thesis at the moment. At a smaller extent, but more or less, I have the same view for the bonds. The bonds also seem to be completing corrective move, also channeled. Obviously, treasuries look a lot weaker than the bonds. There's no question about it. So in comparison between the two of them, obviously, if you want to be short, one should probably be the treasuries. Sorry, and this kind of decoupling, anyhow, the extent of which they have rebounded also explains the move we've seen, the recent move we've seen in the Euro USD. Now, you mentioned with the Euro USD that there is the potential for it to extend a little bit lower. Absolutely, it absolutely is, because even if we see this as a bear flag, as a bull flag, sorry, there is a potential for another push lower towards this trend line support, which more or less coincides at the moment, as you said, with the 121 area. So even if I see a move lower, that will change nothing having to do with my bullish bias for the Euro USD. Same thing applies with the cable, right? So even if we see some dollar strength, by the way, the cable has played ball like magnificently. It has already done that. If you remember, we said quite early that this had the potential of being a tradable low, but there was also the possibility of another push towards 136. That didn't happen. That was a tradable low, as it seems. So even if we see some dollar strength from here, why not? We can come back, retest this channel. This time, this channel's resistance this time as an area of support, and rebound from there. So for the time being, there is nothing bearish with the cable, right? We've been saying that, especially for whoever is listening in during the past several months. You can't remember me saying even a single time that I'm bearish the Euro USD or the Pound USD. Every time we were moving lower, I was telling you that these corrections that we've been seeing during the past few months, all of them had very clear corrective characteristics, all of them. So in all honesty, if you didn't let your sentiment or positioning bias affect you, it was very clear in every single incident that this market was not actually turning lower, but it was simply consolidating its recent gains, right? So the same applies here once more. Now, obviously, commodity currencies are a different story. I'm a little bit surprised, I have to say, that ahead of the Fed, the Aussie, the Kiwi kept moving to the downside. And needless to say, that the Kiwi has already made a very significant move, and I really didn't expect that area to break pre-Fed, and we need to see if that's going to prove to be like a false break or whatever. I would have definitely shorted this if it wasn't for the Fed, because as we showed yesterday, this was a confluence of supports. It's the 38.2 of the move higher, of this leg higher. It's the 200 DMA that was exactly there as well. It was a previous area of support resistance multiple times. And it's even the neckline of a head and shoulders formation. We showed it yesterday. We even had to go back to a line chart to show that actually this is a head and shoulders formation, because on a daily closing basis, you know, the highest level printed is the one of the head, right? You know, this looks bearish from this point on lower, but I can't really commit to something like a few hours ahead of the Fed. I mean, it doesn't seem prudent. I already have positions, and I'm keeping those positions because they're well-established positions. If you remember, I mentioned that Friday night, just a little bit before the market close, I shorted with Chi on our chat room the USD CAD actually at the highs. I mean, I'm short the CAD from like a few pips from the high. So I'm going to be holding this position through the Fed because simply it's in the money. So I'm not going to be risking. I'm just going to be risking some of my profits, and I'm not going to be risking to going into loss here. If we actually break down below this area, I'm going to be looking for 128. So I'm holding. I'm keeping that. I'm keeping my pound Kiwi. Yesterday, for whoever was in the webinar, I said quite early on the day that both the pound Aussie and the pound Kiwi seem determined to keep moving higher. And the reason I said that, let me bring the 4-hour charts here, is I showed the 4-hour charts, and that's exactly what I showed yesterday, that the pound Aussie was in a flag and the pound Kiwi was in a triangle, right? So when they were still trading within a triangle and you know, within a flag equivalently, I said, listen, it's obvious to me now that both of these markets are going to push higher before even giving us a correction, because they're both consolidating in the short-term structures in a way that I would expect us to break out like very soon, and that's exactly what happened. You know, I'm keeping my pound Aussie exposure as well, and lastly, I'm also keeping my palladium. Palladium has been trading in a very weak manner, has failed to pass over 1,000 again, and I think that it might be ready to resume lower from here towards my final target. Right, so I'm keeping these 3 positions. I'm going to be keeping all of them ahead of the Fed. I'll probably just adjust, you know, I'll put some orders so I don't want to be, you know, losing much of the profits, etc. I'm going to protect these positions, but I'm not going to be exiting them. And I'm going to be looking for opportunities following whatever reaction the market gives us following the Fed. Because as I said, I see several opportunities out there, and the only reason I'm not participating is because I don't want to be gambling ahead of such a major event, right? Okay, one more thing I wanted to show, and we had this discussion in the chat room yesterday as well. It's crude. Crude by the day is proving that the scenario that we found a tradable low down there is becoming more and more likely. when we were trading down there, we were a little bit torn of what's going to happen from there. But then I said that, listen, both scenarios are viable, but, this structure here looks corrective to me. So it makes me, give some preference to the scenario that we actually have found the low. And, the way we have been pushing higher and we're currently testing that high there makes me believe that, the chances are now, further tilted towards that having been this actually having been a tradable low, and that having been like a little correction in the new uptrend. So I'm really not going to be surprised at all if we push to new highs. This is also one of the reasons why I feel quite fine by holding short the USD CAD. The fact that crude is telling me that it has much more potential to be showing us further strength, for at least a period, than weakness. And we know that this should help the CAD somewhat. Okay. Obviously, the same thing applies to NOK. It hasn't really responded to breaking below this triangle. So, I'm a little bit skeptical about this, but definitely if crude keeps pushing higher, at least it's going to help the NOK not depreciate too much, even if we see dollar strengthening from here. I want to show one more thing, not one more thing, but one thing that came in mind. I've been showing it for several days now in the chat room. And since this is inversely correlated and quite strongly inversely correlated in periods with the Euro USD, I have to say that the USD SEK is a pair that might be showing us that the next move might be lower for the Euro USD. I mean, the shorter move, right? Why? Because I'm seeing here the structure that looks a lot like a bull flag. So the USD SEK ahead of the Fed seems like it wants to break higher, because this is definitely a very characteristic corrective price action, right? So in all honesty, I think that unless we get the surprise, a dovish surprise from Powell, this pair will be more than happy to resume to the upside for at least one more leg higher, right? That would bode well with the Euro USD pushing towards 121 before finding a low. So obviously, some of the setups look better for USD strength, and some of the setups look better for USD weakness. So somebody will wonder, okay, then I have to say though that more setups look better for USD strength. I have to be very clear with that. And I repeat, in the short term, right? The DXY itself looks like it wants to move higher first before moving low once again. So, my medium to long-term thesis, of course, remains that the dollar is going to move lower, and things having to do with that. But as Stelios said, I also see the potential for a move higher first and then a resumption to the downside. Of course, all these are assumptions, but the only reason we're doing these kind of conversations is because it's good for somebody, and that's an exercise that somebody, in my opinion, should always be doing, to either have a mental note if you have a good memory, or write down which are the setups that favor more dollar strength and which, let's say, dollar weakness. So you already have in mind a plan for what you're willing to do or what positions you're willing to go into, depending on what kind of data, or in this case, what kind of rhetoric we get. Because as we've said plenty of days ago, there is no question that the Fed is going to hike. I believe the chances of them not hiking are zero, absolutely zero. So it's all about forward guidance, right? So the market is only going to care about forward guidance today. And
always
that's what,
better, Steve, to prepare yourself so that you're not analyzing on the fly, you're executing.
Absolutely. Because you shouldn't respond in a sentimental fashion once something happens because you feel obliged to do something with the market.
Or may I say impulsive trading?
Impulsive, yeah. Absolutely. Yes. Impulsive trading will eventually kill your trading account. I have no doubt about that. So, you should always have a trading plan. Say that, okay, if I see, let's say, dollar strength and I see that it's genuine and it's not like an initial reaction, I'm interested in being involved with ABC. Now, if I see dollar weakness and I get the opinion that it's actually something that will have follow through, then I'm willing to participate in, D, E, F markets. So at least you have somewhat of a plan in place, and then of course you reassess seeing the market's reaction, and you calmly take the decision to do whatever you want to do. Now let's have a look at the metals, because the metals are always, we already had a look at palladium, but let's have a look at the metals, because the metals are also interesting, ahead of anything that will affect the dollar and rates at the same time, right? So we see that ahead of this, the gold has been holding a large triangle support. So definitely gold is sitting on support at the moment. So somebody can say that from a reward to risk perspective, looking higher here makes sense, because you're risking very little. On the other hand, if we break below there, we might see some acceleration of weakness. Silver has a descending triangle as well. We're near the triangle support as well. I have to say though that both of them, especially silver, have spent already like a huge period of time consolidating in large ranges, which probably makes them not the best choices in committing to positions, because what they've done best since, let's say, the beginning of 2017 is just get people wrong-footed by producing on occasion, some strong moves one way or another, to only reverse and produce strong moves to the opposite direction and, rinse and repeat, and once again. So personally, I'm not even looking to participate in these markets. I'll keep monitoring them. Eventually, I want to be long both of them, but I'm not crazy. I don't see anything that would trigger me to do that yet. Okay, so my longer-term thesis remains that I want to be, I want to be bullish and I want to be involved with both of them. But I don't have a reason to do it already. So I'm just monitoring. And if you remember, that has not stopped me in the past from even shorting them, because it's a different thing what your long-term thesis is and what your short-term thesis is. Okay, another thing I wanted us to have a look at, and then I'm going to go through questions, because and if you have any questions, please post them now. Is let's have a look at USD/MXN. So also one of the biggest movers today. This is an example of a market, the USD/MXN, that actually favors USD weakness, right? I told you that we have examples for both. You can see it clearly here. We had a move higher that was probably corrective. Why? Simply because, let me go in the short term to the weekly chart so you can get a good idea here. Okay, this is the weekly chart, and we see two things here. First of all, we had an extremely strong impulsive move higher. You can even see I have named it in Elliott waves from 2011 to the high, but it was clearly explosive, right? And then we got a reversal. Actually, we wrote a blog post and actually caught the high in the USD/MXN. That was one of the best blog posts we've written. We got the high there, and we got a very strong move to the downside. But as you know, you should expect, and the vast majority of the cases, you should at least see like two legs to the downside, right? So I believe this was one leg. This was the correction to that. We are now seeing a head and shoulders formation here. And I would really want to see another leg lower before resuming higher. You don't even know. I mean, you might have a complete reversal, but at the very least, even if this is a correction, I would really want to see like an ABC. So everything tells me here that might have been, for now, a tradable high, and seeing also head and shoulders formation develop there, increases that probability. Now, let's go back to the daily. Seeing on the daily this kind of a rebound, besides being a head and shoulders, a potential head and shoulders formation, I can see here, let me draw again. I can see here that after putting another move to the downside, we got a consolidation, extremely characteristic of a consolidation, choppy, overlapping, slow price action, with the RSI working off the oversold conditions, but definitely not even surpassing 60, right? And finding resistance where it should, in essence. And what do we seem to be doing now? We seem to be attempting to break below this pennant for a resumption lower. So, for example, if we see USD weakness, this is one of my favorite pairs at the moment, because the technicals tell me that, you know, it would love to resume to the downside, right? Okay, let me open the question board and see what we have here.
Aye, aye, Captain.
Who do we have for an interview today, by the way?
Well, there was a scheduling issue. Mr. Nobody will be here.
Oh, Mr. Nobody, okay.
Yeah, have you seen his trading performance? Mr. No One?
It says that China holds $1.2 trillion of USA treasuries. That's correct. Stelio, we have a question.
Somebody right there, China.
Yeah, Stelio, we have a question for you. Stel, are you convinced on the move higher towards 70 for crude now? I guess that's
question. Yes, I still think this is the case. We might see a little pullback with the FOMC. Obviously, if the dollar strengthens, crude gets under pressure. But I think that you know, I'm still bullish on the oil, and I think WTI. If I bring up the actually, let me have a look. Yeah, I think we might test there's a zone, a big zone between 60 and $61.50, 62, something like that. We might get a test of that if the FOMC is pretty hawkish in the next couple of weeks. But I still think we're going higher. That's
okay, Sal, let me ask you this: are you following the Saudi Aramco IPO?
Yes, yeah, it's become a joke, right?
They said that they're not gonna list in the U.S. after all, right? And as you correctly said, Dale, there's a chance that China might take that up, right?
Yeah, I mean, just buy the deal, not even list it. And
wow, yeah, I didn't read that actually. Okay.
Oh yeah, they're just that they I don't know if they're going to list it on Shanghai or anywhere in China. That they, instead of going public, China was just going to buy the deal. So
wow. Yeah,
they'd own a good part of the Saudi oil fields.
Yes, that would be huge actually if that happens.
Okay, well maybe you could check it out to see if I'm in left field, but that's what I read.
Okay,
and, I'll
check that out.
Into the whole trade war thing. Why not protect your oil supplies going into a trade war? Make sure you have it.
Okay.
Because I mean, wasn't that the biggest weapon? It's been used on us through OPEC. We used it on Japan preceding Pearl Harbor. So, energy really being a strategic thing to make sure you have enough of when nations are going tit for tat with tariffs.
Yes.
It's like insurance.
Yes. Okay, I'll check that out actually.
And I remember I also interviewed the grain goddess, and she talked about China stockpiling wheat, buying it and stockpiling it. There you go, another thing. You don't think they saw this coming? So, they're preparing for it to make sure they have supplies of whatever they need, because what happens during a trade war is eventually shortages in something.
Yes.
Always ends up occurring. And if you have stockpiles, you're kind of like Joseph in the Bible, where, 7 years of plenty, 7 years of naught, and he had enough actually to, feed the starving populations of Israel because he was a good steward, and he stockpiled wheat like the Chinese are now.
Yeah, you have to be self-sufficient in times of trade wars.
Yeah.
That's for sure.
Yeah. Anyway, just a little biblical trading history. Yeah,
Very
Joseph is my idol as far as a biblical commodity trader.
Very good.
Another question we had here is for copper, if it's correcting lower. In my view, yes. Simply because just by zooming out, you can clearly see here, nothing has changed. I know sometimes corrections need patience, right? But I think that's what we're seeing here. Strong moves higher, corrective moves lower. Strong moves higher, corrective moves lower. And so far, now if we zoom back in, there is nothing about this move. I know it's choppy, I know it's boring, I know it's annoying if you're looking to be long again, but nothing from this move yells that we had a reversal, right?
Let me ask you this, Steve. How can you tell the difference between something that is, X corrective or consolidating after a major move to the upside, between it being consolidation for another move to the upside or a distribution topping pattern?
It's hard to do that. That's why, obviously.
That's why I asked you.
That's why, obviously, sometimes you're going to get something that looks like a consolidation before another move higher, ending up being a distribution, as you said, before a reversal. But as you very well know, what are the best chances for you to be calling every consolidation a potential reversal pattern, or to keep believing that this is a consolidation before the trend resumes? I mean,
that's
which
a pearl.
Which of the two manifests more often, right?
Right. So you could go broke trying to pick a distribution top, and you're better off just going with the long-term trend until the trend has shifted, and then you'll know it was a top. Got it.
Exactly. And somebody, the most important thing is to stop being afraid of losing money, because in all honesty, there is absolutely no way you're going to make money trading if you're afraid to lose money. Meaning that you have to know that no matter how disciplined, no matter how good you are at trading in whatever fashion you prefer to trade, if you don't keep taking the opportunities that produce the proper risk reward for you, you won't be losing money, but you won't be making money either. So if you know that what you're about to do, statistically speaking, has a high chance of happening, you should keep doing it, because yes, sometimes it's going to be producing losing trades, but in the vast majority of the cases, it won't be producing losing trades. But in order for you to have those winning trades, you also have to have the share of losing trades, right? So stop worrying. If you have confidence in what you're seeing, stop worrying that this might not work, and start caring more that this is something that has a higher chance of working than not working. That's all it is about. Nothing else.
Great session, Steve.
Thank you, mate. What entry levels for WTI do you suggest? Okay, let's go back to the WTI, and let me tell you. First of all, buying it up here exactly at this height makes not much of a sense, right? So if we dip down to 62.65, I would say that that would be like anywhere between 62.30, 62.65. Or if we push higher from here and then we come down and retest this area that we're currently testing as resistance, as support, roughly the 64 area, then that could produce another buying opportunity. But definitely buying it exactly where we are, you either bought the break from this pennant, or you're not buying it as we speak. As I said, either a move down towards 62, 50, 60, or if we break higher from here and then we come down, we retest the 64 area support, that might be another opportunity to you know, to gain some exposure there. What do you think of a short dollar strength? Sorry, that's what do you think of a short dollar strength? You mean probably short-term dollar strength. So silver dip to support at 15.8, and then silver reverses up. Yeah, sure, it can happen. We might see. We already said that we might see like a reaction higher for the dollar. But personally, I don't believe it can be much long-lived. So yeah, sure, it can happen. And 1580 is definitely that area around like 1570, 1580 is definitely an area of support. You can see it by zooming out. You can see that this is one of the areas I've marked, you know, as a supply resistance zone. Sure, it can happen. Anything can happen. You know, that's why we have to have trading plans. You know, depending. What we answered that. Could you analyze copper? We just did this. Do you have any ideas about sugar? I've never traded sugar, but you know, technical analysis is technical analysis. So just give me a ticker that you want me to see, because usually all these products have more than one ticker. What do you want us to look at? And I will gladly, you know, do some technical analysis for you. Will Nikkei have a risk on? Let's have a look at the Nikkei. There we go. Whoop. Oh, yeah. There it is. I think that Nikkei is actually in danger, because this looks to me like a consolidation before one more leg lower might manifest. So I would be very, very careful here. To start believing in some upside for the Nikkei, I would at least want to see, at the very least, want to see this trend line break to the upside, right? Until then, I would be very, very careful being the Nikkei. Very, very careful. Because in this chart, I see a higher likelihood of a resumption lower first than anything. Although I have to admit that we're currently, and I saw this the other day, we are on a confluence of supports. So, you know, I wouldn't want to be short either, but it looks heavy to me. And I think that if we break below 21,000, especially if we get a daily close below 21,000, because as you see, we probed that area below 21,000 multiple times, but we never managed to close below it. But I do believe that if we close below 21,000, you know, one more leg lower has started for the Nikkei, in which case I would be looking decently lower from there. So as I said again, be very careful about the Nikkei. You can be long here if you wish to be long here for a risk on move, but you need to have a very disciplined approach, because as I said, closing below 21,000, I would not want to be holding that position in any way. Okay. Does this kind of an event put to the test sell on a rumor and buy on fact theory? Yeah, absolutely, Sunil. I mean, many, many times, this is what happens with this kind of events. I mean, you know, something has already been discounted, and following, you know, the event itself, you see, you know, the opposite move. Thank you, Ed. What is my target on the pound Aussie? Sure, let's have a look at it. Nope. This is my target for the pound Aussie. The 161.8 of this corrective move lower at 185.52. Okay, so ultimately that's what I would want to see there. FTSE and DAX, absolutely. I'm more of a technical trader, but I always want to take into account there's another question I'm answering now. But I always, you know, take for my longer term view into account the macro stuff. Always, I want to always have a top-down picture. Sugar USD. There we go. So let's have a fast look for you. Oh, it looks very bad. It looks very, very bad. I can't think of a single reason why I would want to be long sugar from what I'm seeing here, in all honesty. So what I think about sugar is that the chances of finding a low here based on this structure are very low. Be very careful if you want to trade it for a reversal, because everything points to a resumption lower here. Okay, last questions, the FTSE, the DAX, and the NASDAQ. And then we'll talk on the chat room about the rest, and especially after the FOMC. So let's have a look at the FTSE, the DAX. Let's start from the DAX. DAX, more or less the same situation with Nikkei. It looks like to me it's consolidating, and as long as it doesn't surpass this trend line resistance, I would be very careful, because another push lower is quite likely. And the FTSE, as we said yesterday, it's looking worse than that. Why? Because it has already broken below its equivalent consolidating formation, right? It's broken below this triangle. So be very careful. I mean, it looks bearish. And last but not least, the Nikkei, sorry, the NASDAQ. You know, the NASDAQ is obviously looking better than the vast majority of the other indices, but I have to tell you a few things. And yesterday we spent a lot of time in the chat room showing specific charts, and this is Facebook, right? Now, what do you see here? Dale, what do you see here?
A throw over and then back in the channel, failed breakout, and a gap lower into it. Pretty negative action. I don't know if I would chase the short side here, but negative action. It diverged at all the way up. Bearish.
Check the RSI, diverging since April 2017.
Yeah.
We are.
Did you ever watch CNBC over there, guys? There is one technician worth watching, and I could bring up his name. He doesn't have an axe to grind, but Carter Worth is excellent. And he was actually showing Facebook rolling over, underperforming before the gap down. It was breaking an uptrend. He showed it losing trend, and then the news broke. So, Zuckerberg looks like he's going to take a little hit to his net worth.
And let me add something to this. Okay.
Even Amazon might be the only one that could eke out another new high.
Yeah, let me point something to this. Let's assume, let's just take the bottom of this channel, and let's assume that that's a tradable high for, I'm not going to exaggerate, for a corrective move lower, nothing more than that.
Okay.
Look how much area we can cover just by producing a healthy little correction, right?
Yeah.
Now, let's take it one step further.
Could cut it in half.
NVIDIA. What do you see here, Dale?
Say 3 drives to the top.
Bingo.
Look at Boeing. Boeing, I saw that, and that's been one of the star performers. That topped on a 3 drive too. Way off its high. BOE.
What is?
I think it's
BOE.
Or B.
There it is.
Yeah.
Nope.
No.
BOE.
And that was one of the leaders.
Let me just write Boeing and see what we get. Okay, Boeing common, BA. Okay.
Look at that 3 driver. Same thing. So when you start to see them, you see them everywhere. And look at what a leader that was. That went from what, 138 to 380. Amazon, yeah.
You mentioned Amazon, right?
Yeah.
I'm not very sure it hasn't already broken. Just look at this.
It could, it could have. I'm saying if there is, it looks like the only one that hasn't suffered enough technical damage that could eke out another high. But maybe that was it could. The rebound yesterday.
So
remember we were talking that we said on the next break that the FANG stocks could be the ones to be short because they have more air to be taken out of them about a week ago. That's what's happening. You got some pretty good insights in here.
Apple also. So bottom line, what I'm trying to say is that the NASDAQ as an index looks good. But in all honesty, some of the major drivers that were propelling NASDAQ higher look, to be in danger, right?
Yeah.
So personally, I would be very, very careful with the NASDAQ because we've seen stocks. I showed you NVIDIA before. NVIDIA has gone from $30 to $250 in no time, in essence. And Facebook, an equivalent situation. Amazon has exploded higher, exploded. And when you're seeing such moves and such a rapid appreciation, then obviously you don't need much to shake the fundamentals and the sentiment behind that, right? Because
when popping sounds.
Yeah, when you get such a rapid appreciation, you have two kinds of investors participating in these markets, two kinds of investors. And now you're going to see what the problem is. What first kind of an investor? The person that believed in that, bought it early on and bought it to keep it, right? So when the bubble pops, or you don't even need to call it a bubble, when something happens and we see a big reversal, that is an investor that is likely to say, okay, I bought NVIDIA, let's say, I'm not going to tell you that $30. I bought NVIDIA, let's say, at $60, and it topped at $260, and now it seems to be reversing and it's at $220, let's say. Okay, taking profits from 60 to 220, that's a magnificent trade. Sure, book it for me, and, I call it a nice trade. And the second kind of an investor, the investor that suffered from FOMO, that was actually so anxious to participate in what seemed like a everlasting winning series of trades of everybody buying like the FANGs and whatever, and making money every day, that they bought at a very bad price near the high, and they might have gotten in profit like for a few weeks, and they suddenly, because reversals tend to be brutal, then you get a reversal and they suddenly find themselves, holding the bag. Yeah. And, it's very likely that kind of an investor is going to panic. They're going to be like, oh, I messed up. I shouldn't have bought that high. And then they're going to be selling. So both these kind of investors are likely to cause, the market to rapidly depreciate after the first signs of trouble start appearing after such a strong uptrend. And that's why you should be very, very careful with things that, have produced these kind of moves. Anyhow, I think that, in the chat.
You're a natural teacher. So we had great analysis and a tutorial at the same time by Steve Volge today. And we had some great commentary from Stelios. And Blake had some real dynamic things to say. So, I wish everyone a lot of luck today. I'm with Steve about reacting to the reaction rather than gambling and, betting black or red today. Also, tomorrow, if you like options, I have AJ Monty is going to be joining us. His Twitter handle is @TheOptionOracle. One of the more famous option guys out there, plus he's kind of a metalhead. I'm going to be interested in seeing where he's at on gold and silver and the market, and will be live streamed on investing.com. So I'm looking forward to the aftermath of the Fed and a great Thursday with an excellent guest, and you guys could just expect the same, A little tease by me, a lot of great content by Blake and Steve and Stelios, and maybe one of these days we could get Andre to talk to us, and Grega is due for a pop in my extremely accurate and humble opinion. So everyone have a great day. If you didn't catch my tweet yesterday, I'm wishing everyone a great spring trading season with lots of growth in our lives and your life and growth in your account balances. So let's have a great spring trading season, just like baseball here, guys. It's spring training and we're spring trading. So see you in the chat room. I haven't been there in a while. Maybe I'll drop in and look at all the action junkies and what they're doing. And I want to thank everyone who supports our webinars. We've had thousands. We're about a week away from 1 year of conducting these webinars every day, and several hundreds that have supported our efforts by becoming subscribers. So good hunting today, guys. And remember, don't just count your pips, count your blessings. And we'll see what how the table is set up tomorrow. And members, get in that chat room and see what Blake and Steve and Stell are doing after the Fed. And we'll see everyone tomorrow for Thursday with our special guest, AJ Monty at the Option Oracle. So that's it. Adios. Oh, you're very welcome. You're very welcome, guys. All right, my trading warrior brothers and sisters, have a prosperous day. See everyone tomorrow. Thank you again, Steve, Stell, Blake. Adios. Remember, the markets will be here after the Fed. Make sure your equity is. See you tomorrow.